So my name is Kareem Elsirafy. I'm the managing partner of Modus Capital. Modus Capital is a hybrid startup studio platform. We began in New York City back in 2015. We have a really interesting model to support entrepreneurs beyond just capital. We had a couple of successful liquidity events with US-based companies in the Middle East. So we've been in the Middle East over the past 2 years, kind of exploring the ecosystem, understanding startups, understanding investors, and seeing how we can adjust our model to bring it to the Middle East and to be impactful here. So I think there's a lot of opportunity. There's a lot of really greenfield investment opportunities here in the Middle East and in the UAE. For example, one of the things that really caught our attention is we had invested in some medical services companies in the US, and realizing that the UAE, specifically Dubai, is trying to create markets that aren't dependent on oil rents, one of them being medical tourism. Instead of traditionally flying to Germany or the UK or the US for medical treatment, it's a very, very big up-and-coming industry. So I think there's a lot of opportunities in a lot of different sectors throughout the Middle East. Countries have two economic profiles, those that are dependent on oil rents, and they're trying to diversify their markets away from those oil rents. And they do that by investing in early stage technology companies, early stage companies, and SMEs. And then frontier markets that are going through a different developmental process, still same goal, trying to establish independent, sustainable local markets, but with different funding source, different strategic initiatives, obviously. I think there's two main differences, or there's two facets of differences. The first one is on the investor side. I think investors in the Middle East region are still going through a learning process. What are the things that you need to look out for? What are the things you need to consider when you're looking to invest into a company, early stage company or an SME? And that's everything from the interfacing questions. Okay, as an investment, what are some of the things that I need to look out for, especially in this new industry that hasn't really been tested here? But also from the structural component for the entrepreneur or the business owner. How do you create a mechanism, or how do you put a deal together that is good for you, fair to the entrepreneur, and still incentivizes them on the short term and long term to want to be part of, to continue to grow that company and be part of that company. So I think on the investor side, there's that. And then on the entrepreneur side, I think it's a little bit different. I think that there's a little bit of a skills gap. That skills gap is primarily focused around, I think, digital growth and proper product iteration, so properly managing products. These concepts and frameworks are well tested in the US, but you don't have enough individuals in the market in the Middle East who have gone through a company life cycle from ideation all the way to exit, so they don't have the experience to be able to support the other entrepreneurs here. So I think it's a skills gap, and that skills gap is a byproduct of not, again, having the maturity level of the market there, and that essentially trickles down to knowledge and information on best practices and how to push your company forward in the best, most efficient manner. That's a great question. So Modus Capital, our model is not like traditional VC where we just deploy capital and then provide value added through our network or relationship, and more than a accelerator or incubator program, right? So what we do is we actually integrate operationally with companies, and we provide them a platform for holistic support throughout the company growth cycle. So for example, you have your traditional investor who can syndicate other investors or introduce you to strategic relationships on the business development side or on the strategic partnership side. And then you have incubators and accelerators who have very condensed short programs. It's really a lot of information for entrepreneurs to be able to retain. So they graduate from these programs and then they find themselves still lacking some knowledge, still lacking, knowledge retention from the program that they've been in addition to further knowledge on what comes beyond that phase that they're in. And what we do is, by providing that operational support, we actually give them a safety net where they have that knowledge, they have the support at any phase of their growth cycle. So whether they need an entire development team, in the first year after funding, or whether they need a highly specialized expert such as a machine learning expert or a data analyst in 3 or 4 years after they're, a B series or C series company. We're actually able to provide that operational support to them throughout their growth phase. And that's really where our difference is. Sure. So our portfolio is actually constructed in 3 different phases by companies in 3 different phases. SMEs are the anchor. Those are small to medium businesses that have a very strong brand or product, very, very safe. That's the anchor for our portfolio. And that allows us to get some exposure on a little bit more higher risk. The higher risk are seed and series A, which are about that ticket size, and then incubator as well, which are somewhere between 50,000 to 150,000. So those are the phases that we invest in and the ticket sizes that we invest in. It's a really, really great question. So a lot of people have been discussing about a funding gap and articulating that there is a lack of either capital or investors to invest in, I would say, the growth phase of companies. And I actually have a different concept on that, or a different take on that. I think that the issue here is, if you recall, I talked earlier about the skills gap. And I think what happens is what we like to call the entrepreneurial cycle of frustration, right? An entrepreneur goes into a program, he gets out, has limited information, and they can only go so far with their company at that point. So what happens is the company growth begins to stagnate. And when the company growth stagnates, what you have is the investor, either well-educated investor or still acclimating investor on, just beginning to invest, they see this as a negative sign of growth for the company. But what it really is that it's not that it's a limitation of growth, it's that they just don't have the skills or the knowledge to be able to take the company to the next level. So they don't have the knowledge, the company growth stagnates, and as a result, investors, it's not that they don't have the money, but they don't have the confidence to invest. So if what you do is you fill that gap by supporting the skills, what you do is you empower the entrepreneur to be able to break through that stagnated growth and then get the proper metrics and numbers that are attractive to an investor. On the same side, also discussing with the investors, hey, what you're seeing, this trend, it's not indicative of a poor performing company, it's indicative of something else, right? And I think helping that education process for investors is critical. So that's really where we see the gap. We do. So our investment mandate is to find companies that have very high probability for social impact. So like I would say every other VC, they look for the most disruptive companies. We do look for that. We have an interior criteria that we look at to see how big of an impact a company will have socially and on the market that we look at. In addition, our mandate is to identify cross-border opportunities. So if there's a good US-based company that we know with a little bit of adjustment is portable to the Middle East market, be it Egypt, Saudi, the UAE, we would look for those types of companies to invest in and work on the portability process to have them here, and vice versa. There's lots of companies, lots of great entrepreneurs, great products, great technologies that are coming out of the MENA region that are very, very applicable to European and US-based markets. So those are the 2 things we really like to focus on. Social impact, the cross-border deal flow opportunities, and then also the type of founders is obviously critical for us. We like to find companies where we can provide our value add structure is a really, really good fit for the portfolio companies. It's a great question. In the beginning, they were actually all coming to us when we began in New York. We built this reputation as a high growth, high value creation team. So companies were coming to us all the time. Now it's been a little bit different. Now what we've done for our first cycle of companies, it was a byproduct of my roadshow, being in the region for a year, really understanding the ecosystem, meeting people, discussions. We found some really, really great companies to put into our first cycle, which we began in January. There were 10 companies. They were from the UAE, they were from the GCC region, Egypt, and also the US. And then what we're moving towards now is an actual call for companies where for the next cycle, we have our mandate, we have the structure, we have the growth stage of the companies, the stage of the companies that we're going to be looking at for our portfolio. And it will be a traditional call for companies where they'll come, they'll apply, and through that application process, we'll look and find the companies that are the best fit for our portfolio. Sure, so we've been formalizing our program in July and finishing next month in August, and towards the end of August to early September, when everybody comes back from the holiday, hopefully well rested and ready to hit the ground running, we will be making our second call for companies. Modus has 4 business units in it. They all provide strategic value add to the other, and again, holistically create this entrepreneurial support platform. The first one is Modus Capital, traditional VC. Invests, as I said, with a portfolio based off of industry agnostic, but based off of asset stage. And then you have Modus Operations. It's a full service agency. It has 2 mandates. The first mandate is to perform due diligence on companies prior to the venture fund investing in them. We do this by engaging with them operationally to help tackle their top 3 operational pain points. And then if we do decide to invest in a company, as I mentioned before, Modus Operations' second mandate comes into play, which is to holistically support all the portfolio companies throughout their growth phase. So that's Modus Operations. It's full service agency, strategy, design, development, and execution. The third pillar was really a byproduct of our office in New York. It's the Modus Collective. Because we have such an intimate relationship with portfolio companies, we're working with them daily, weekly, in person, strategizing, etc. We found the need for them, well, not really the need, they found the need to be close to us in our offices. And what's happened is in New York, we got pushed out of our 7th floor office to the 8th floor, 8th to the 9th, 9th to the 10th floor, because the portfolio companies really just made sense for them to be close to us in the ecosystem. So the Modus Collective is the third pillar, and that is essentially a mixed use co-working space that we will be setting up in Q4 this year. And that's essentially to house all of the different business units in addition to the portfolio companies. It also allows us to, as an opportunity to source new companies. So companies that just come and work out of the space, it's a great opportunity for us to identify potential investments. And then the last one is the newest, it's Modus Events. And Modus Events is essentially, because we don't have a graduation date for our portfolio companies, it essentially acts in 2 functions. One, as the promoter of the ecosystem, talking about what we're doing, what our portfolio companies are doing, etc. But also, and more importantly, as the educator. So Modus Events holds clinics, workshops, and curriculum-based events to help teach entrepreneurs in critical components in that skills gap that is actually missing in the region. And this is the entire platform and how it holistically works, again, to provide the ecosystem with a very, very strong foundation for entrepreneurs. So there will be location in the UAE, a planned location in Saudi, 3 locations in Egypt, and 1 in the US as well, in New York. So companies either focus on their initial mandate and then focus on social impact as a byproduct, right? So their priority number 1 is financial returns for investors, and then to the extent that they can have a social impact, it's a byproduct, right? For us, we try to kind of flip that lens around and think social first. And the reason why is because there are, in markets that are emerging, you have a large consumer demographic or consumer class or even business class that has a lot of pain points, right? And in those pain points, the best opportunities is to alleviate pain points, right? So you're essentially killing 2 birds with 1 stone. You can find an issue or a pain point that a consumer or a business is having and be able to provide a solution for that pain point, and that solution will primarily have a significant social impact as well, right? So we think that in this type of a market where you're not squeezing in for that 1 or 2% differentiator, you have more of an opportunity to, capture a large market segment, to be very, very impactful on a large market segment, which is why we feel that this region is the biggest opportunity for us to have that impact.